All right, good morning, everyone. Hope everybody's doing well today. Wait, where is it? I lost it. Oh, there we go. All right, there we go. Sounds good. Thank you, Neuro. As good as it's going to get anyway, right? We'll see if my voice holds up fully today. I was hurting yesterday afterwards. Like all day, I was like, Melissa kept talking to me. I was like, I can't talk. No more talking. Yeah, coffee's ready, but we'll see. My voice is still not great. Babies thankfully slept last night, though, so we'll see. Yeah, we'll see how it goes. But you said that, not me. Yeah, I know, right? All right, so some interesting data this morning thus far, but also not a lot of movement from it. So kind of interesting how it's setting up. If you look at a lot of things, not a ton of movement. -7, -28, all of a sudden the 110, and then -12, 11, -30. It's a little bit, not much, right? 17 and 82. So bad news into the GDP, right, on the monthly basis on the pound. But yet we're seeing the pound yen up, right? You're seeing euro pound also up again, showing a little bit of weakness and showing a little bit more over here. Then we have the PPI data. Well, the PPI data, again, kind of feeds into the narrative that we're hearing that the Fed is going to continue to raise. And, we haven't seen any signs yet. And yeah. The scary part about this is for a while we saw core raising in the regular PPIs or the regular inflation gauges coming down because, gas prices were coming down. They weren't at $5. They were back at $3.50, right? Well, we've seen that creep back up again. And now, the expectation was it was going to be a 0.2 and it came in double at 0.4. So, again, Fed already has that. They've already seen that data. So it's nothing new on that one, right? So it'll be interesting to hear what we get one out of G20 today, what kind of headlines. And it is day one, so you tend not to get too many headlines out of day one. Again, typically it's, today is just everybody saying their piece or whatever. I'm sure it'll be a lot of, Putin smashing, like whack-a-mole type stuff there. And yeah. Then we get over to FOMC notes. Now that's going to be the big deal today. Seeing the reaction, seeing the fact that this is double, and yet this was horrible, and it's only down 26 pips, shows me, right? Tells me, shows me, right? All eyes are on FOMC today at 2 o'clock. So it's going to be one of those days where we need to really watch the markets closely, look for pre-movement, and then look for basically what's coming later today. Yeah. It's going to be one of those days. I do think, again, I think without a doubt they're going to affirm that it's 0.75, but I think everybody's already in 100% agreement that that's what's happening. At this point, again, with PPI raising, this is another one of those data points that supports a continued raise, a continued push. Yeah, kind of wondering if they're going to tell us about what's going to happen in December. If they're going to say, hey, listen, we're going to go 2 and then we're going to pause. I don't know. And is it going to be another 0.75? Is it going to be a 0.5? Just curious to see what their opinion, if it's changed at all, or if they're going to maintain that, we're going to hold rates, we're going to go past where we need to, and we're going to hold them for some time to get things back into the correct order. We'll see. But right now, the fact that we had things like this, a big miss, and then a double, and it's only 20, yeah. Tells you that everybody's looking at FOMC being like, all right, what are they going to do next? Now, we got that today, and then tomorrow we go right into the actual CPI reading. Now, the actual CPI reading is kind of interesting for the fact that, again, it is at 8:30, so we'll be on before we can really do anything tomorrow. The CPI expected to tick up on a monthly basis. Again, not what you want to see, but everybody will be saying, oh, look at that. The top line, the year over year, we're down. We're only at 8.1 right now. Yeah, maybe. And again, on a yearly basis, that is great. But again, it's not going the other direction. It's still 8% higher, still 4 times higher than what the mandate actually is. And we're seeing, again, remember, there are spikes back and forth. We're seeing core up 0.4 and regular CPI at 0.2. Both of them not quite as bad as before, but still moving in the upper direction. Question is, with this missing by this much, are these now forecasted too low? And could they potentially be moving in the other, more. And then again, unemployment claims not going to make that big of a difference. So, yeah, so we got a lot of inflation-based data in the next 24 hours. Remember, the Fed has already seen both of these. They already know what it is. It's probably already included in the minute notes. But the public hasn't seen it yet. Oh, excuse me. So, leads us to an interesting 24 hours. And I say 24 hours because, again, obviously, we know what's coming later on today. Okay. Ow, buddy, what are you doing? Stop. I know you think that's funny, but it's not. I do have Kip today. Melissa has a doctor's appointment this morning, so I have Kip for the entire time. I'm hoping that she rushes in, when she, if her appointment ends early, but ends when it should end. Yeah, duh. Exactly, duh. We'll see. He's in my lap right now, so that's why the kicking of the keyboard is always fun and exciting, all in the same bit. All right, sorry. All right, so that's what we got going for the next 24 hours. Like I said, it's a lot of data. The PPI, again, having little to no movement today, FOMC being big, and then obviously CPI. Not that the Fed looks at CPI. It's not one of the most important things for them, but it is something that the markets are looking at, and that's what people are, the retail traders looking at going, oh my God, look at this. Look at this. Look at this. The BOJ will continue easing to hit price stability target. It's still recovering. It has support. The big difference in monetary policy with U.S. and Europe. Yeah, of course it's different. Once the impact of energy fuel will slow down to less than 2% in the next fiscal year, we'll continue our monetary easing to achieve 2% inflation target in stable and sustainable manner. That's nice to think of, sure. Yen appreciation could have a good impact on the economy as a whole, but there are some sectors which are suffering from a weak yen. Yeah, I mean, that makes sense. Like I said, the weakness is fine, right? The weakness is fine, but eventually it gets to the point where not only does it hurt certain sectors, but it crushes them. So, yeah, we'll see. Oh, here we go. What does she have to say? Oh, I can't wait. We're seeing a world that presents quite a lot of threats. Central banks need to cooperate with each other. Central banks must understand spillovers and spillbacks. Monetary and fiscal policy must cooperate, which it doesn't. It's nice that she says that, and she wants that. And it's like saying we need to have world peace, right? We can't get 12 Fed members to agree. The only thing everybody agrees on is OPEC Plus, is that we need to make cuts, right? We need to make more money, guys. It's the only agreement. Saying the statement again, speechwriter, saying the things that need to be said, or not need to be said, but the check boxes. Oh, here we go. We are ready to provide it with Nord 2. The ball's in EU's court. Ready? We're ready to supply additional volumes in the winter season. Europe will grab natural gas from market, while developing countries will pay a higher price. So, yeah, Russia's ready, doing everything they can. So, I love it. One day, sabotage. The next day, like, hey, we're ready, right? We got stuff if you want it, guys. Come get the crack, right? So, yeah. Let me do all these logins real quick. Come on. Slow. Still at 31. Oops, I guess I gotta do this one. You guys can see my account numbers now. You can try to drain them if you want. There you go, buddy. Get down. All right. There we go. All right. It's always a fun thing about being logged in. It's like, oh, there we go. I've been on all morning, and now it wants me to log in. Actually, you know what? I may have logged myself out. Here, get down. There you go. Good job, buddy. Good job. All right. So, dollar index, you can see really zero to no movement, right? Literally nothing, right? Always a little bit crazy, right? When you see something like PPI and you're like, wait a second. Hello? Was there PPI? And there was, but I just go, yes, I wasn't saying hi. Yes, say hi to your friends. I was talking to the people on the internet. Um, so I would say right now it's in more of a position to kind of turn and roll. You can see that it is definitely high in the peak. Selling wise, there's nothing there. We did kind of hit a top, but again, seeing PPI do absolutely nothing with a double like that just goes to show you again whether the market's slamming into monstrous sellers or again everybody's looking at FOMC and with it being ultra high here. Any type of again, I don't know that it can move much more with any hawkish tone, but anything in the other direction. Anything that's even remotely weak, look for this thing to tumble. Is where I think this one goes. So again, there's a dollar. The VIX obviously high. Again, it's been doing quite a bit of bouncing, chopping back and forth, and we're all sitting on the high side right now. Even though VIX is high, though, everything is kind of in the green right now. And again, the reason why it's high is FOMC could really mess a lot of stuff up for a lot of people, right? What are you doing? Well, you're too small. You shouldn't be doing that. What? No. What? I understand. I do, but I have to work. Here, take this coin. Here, take this coin. Give it to your friends. So yeah, I would say, again, I think the VIX goes a little bit higher today with FOMC. A lot of people are going to be looking at that. And again, seeing kind of a morning kind of ES rally being up from since yesterday, it's kind of setting us up. This goes higher to be able to sell it to go back to the downside. Kind of curious to see how the market overall feels that that PPI number is going to be important. Like I said, PPI is the one that people don't necessarily always understand. Okay, so let's dive right over into currency. So we know currency wise, right? We can know that there's no major movers. I mean, this is down 23 and it's kind of rallying back again. You're seeing it more or less flatline. So yesterday, late last night, around 10 o'clock, we kind of hit this low. And again, we talked about breaking through, right? The 64.48 and getting a pullback and an entry. Haven't really gotten it yet. We're still waiting for it. I mean, we've had kind of pokes through, but never any basing and a pullback looking to go down. And we knew this was going to be a problem yesterday when we talked about it. This is the one I had to scroll back and I was like, oh, there's a zone right below it. So we knew this one would be a little bit more difficult to kind of get into. You can see it's nowhere close to a 23. I mean, there's two of them drawn here. It's nowhere close. It's more or less flatlined. And again, we were sitting right here yesterday, so had a little pop up and a little drop down again, and then nothing. It's flatlined. So I think Aussie where it is at. Again, Aussie's in a weird position because it will be affected by gold. And again, the entire point of today is curbing inflation, trying to crush inflation down, which also crushes gold. So I would say on a fundamental basis, it is more set up for shorts than anything else. But the reality is, hey, listen, we're finding buyers down here. Is it ready to pop? And if they come out with a very big hawkish statement, which everybody knows they're going to do, does that change the trajectory because the market's already prepared for a hawkish statement? Or if they talk about any type of pause, is that where we're really going to start to see this thing maybe pop up a little bit? So I think we need to kind of see what it does. If it totally flatlines down here, I think what you do is I think you play the reversal, right? FOMC should absolutely give us a spike one way or the other if there's no movement. I think we look to see where it bounces, and then once it kind of slows down and stalls, I think that's where we take the reversal back again. Because again, what are they really going to say, right? I mean, PPI is great. Can they afford to say, we're going to do one more raise and then we're going to hold and wait and see? No. I mean, they're going to raise twice. We know that. They pretty much said that. If they say two and then pause, I mean, if they raise it another 1.5% in the next, 3 months, I don't know. I don't think the market wants to hear that, but does that send the dollar going crazy? I don't know. A lot of questions. So with it flatlining right now at a level where, again, we knew there were some sellers, and again, the sellers have they've obviously gone lower, right? It's here and then lower. They're not holding up. So we really kind of need that base before we take this short down. But, I think on a purely just a purely technical news-based trade, I think you look to go short for the actual release. But I think the safer alternative, and again, it's one of those things that make sure you're very, using an options-based strategy so you can't lose more than, what you're planning on. Otherwise, I think you play a parabolic retracement. But overall, I think the Aussie dollar definitely more bearish. The goal is to crush inflation. Again, Aussie dollar acts as a proxy for gold. I think gold today is most likely onto the downside, and with it raising right now, gold is actually up 0.4%. Again, rallying in price. I think it's really setting up for a sell, which again would continue to drive this lower. Now, Aussie yen. also having some problems. Now, yesterday we didn't quite make it. We talked about how there was kind of two different levels in here. And you can see that popped up, it grabbed the 23. Yesterday we were sitting kind of right here in this area. It was about a 2-to-1, almost all the way. Actually, it made it to actually a 2.75. So one of those situations where it's like, we knew it was at a reversal time. Do you risk 2.75 to make 0.25? And the answer is no. So in that I'm not going down, and when you look at this, you say, hey, listen, there's where profit was supposed to come in, and guess what? Here, I'll zoom. Whoops, not that one. Go back. I'll zoom this in. Oops, not that. This is where you expect profit to come in, and you can see it barely peaked below, barely peaked below, barely peaked below, barely peaked below. So again, just goes to show you that understanding where to pick your profit targets is extremely important, okay? So with that now, I will pull this all back again. Let's kind of reset it for later today. Right now, we're going to go up just a bit higher on that one. This bottom is still good there. That bottom is still good there. I can remove that. I'm going to throw this back on the bottom side here. Because again, buyers there, but do I want to play with those buyers? Maybe, maybe not. Like I said, it's been front run and actually has held pretty well from that level. So right now, I would say, again, the thinking is kind of the same. Seeing it start to grind up here a little bit. Again, it is some yen weakness, them acknowledging that we're okay with this one. But I do think overall this probably gets drugged down a bit. Just because, again, Aussie being that proxy, I think gold kind of turns. Now, right now, I would say, is there a potential trade right here? Sure. This 92.17, if we are already in that trade, I would probably close it down before the news release comes out. Or again, if we are sitting there, very, very small risk on that one. The risk on that is only about 19 pips. That could be a potential turning point. And again, we already know we have sellers there. We know there's a 23.6 up there. We also know that if it drives into there within an hour, 30 minutes to an hour beforehand, it's driving into an area where it's looking for additional sellers. So everything matches up. I would say Aussie yen short is probably what, again, would be how I'd play that one. But there's a few levels in here, one at 92.17. I guess we could go, no, it's 119 pips higher. I doubt we go 119 pips before FOMC. But if we spike up to that level and then start to slow, that's absolutely a parabolic retracement type scenario, right? I think, 93.10 or 93.06, 5, somewhere in there. Absolutely an area where if we take a spike up, 100 pip spike, the daily ATR is 126. That would be a one daily ATR spike to the top side. That's where we could have a turn and roll back down again. And remember, the goal is to crush inflation. Gold is that hedge. So again, if we do have a parabolic move, 93.06, 93.07, wherever we pause around here, that would be where we look to go short. Okay? Buddy, what are you doing? Yes. We're not supposed to be standing in the chair. Euro dollar. So euro dollar, pretty resilient. Yesterday we were standing right here, basically right where we are right now. We're minus 6 pips. We have had a little bit of a pop and then a retrace, but it's really holding firm right now. It hasn't been able to retrace all the way back down again. I do think this 96.37 comes into play today. That is the 78. Again, if it bounces up here, great. I'm kind of happy that it's poked down here and kind of reared its head. But right now, if you look, we definitely have sellers on the top side, and we have a lower channel. Lower highs, lower highs, lower highs, lower highs, lower highs, lower highs, lower highs. And we push to the downside. So, yeah, I mean, right now, are we in an area to go long from it? If price was able to drive all the way down, maybe, but, no. I mean, this is another one of those ones. I on a fundamental basis, I don't think so. On a technical basis, there are two small areas. Again, here, but at this point, I don't think I want to play with that one for a long. How far is it? Let me see. It's only 30 pips. It's a little choppy thing in there. Hmm. Hmm. I'd like to see. Now, see, we were putting a lot of small little 30-minute levels in here. What I'd like to see on the euro, this one right now, I'd like to see 1030. I'd like to see it come into this level here. Right, we're kind of bouncing off it right now. I'd like to see it hit this level and then start to rally up at 1030. Okay, I'd like to see where it kind of pushes itself after that kind of push up. And again, maybe it continues to drop down again, which again messes up some of the analysis here. But again, we should be expecting some type of profit taking to come in. Here's where the European market opened, right there. Okay, so it's been basically straight down. It's been euro strength. We are looking. We should be looking for profit taking coming in rather soon here. With profit taking coming in, this is a potential area to bounce at 1030. Right? Again, nice little bottom, kind of front run, confirmed here late last night, and then kind of already kind of tiered off of it. If this is the area that we do start to bounce at 1030, I think there's definitely some selling abilities in here, or selling areas that we could have the ability to short from. So yeah, I'd watch those. The other option is, again, if we come down and this doesn't hold at 1030, if we do have nothing but straight down, if there's absolutely zero reversal today, no profit taking, if we start basing in here, again, this is where you could put one of those trades on where if it bursts through with news, look for it to spike all the way down again. And I think this 95.50 is probably where this bursts down to. Has a daily ATR right now of 123. 150 is down to this zone. So if we take a spike down, a 150 spike would be in kind of the range of where you would expect it to go to. And again, that would be dollar strength coming into the market. Them saying that, we're doing 7.5, 7.5, and no pause. We're just going to keep rolling, right? So I like that one, but I think overall we look for targets somewhere down in here. And again, as far as spikes go, if you do get short today, again, 95.60 is where that I would have my profit target, particularly for the FOMC meeting note. Okay, Euro pound. Look at that. Run straight up. We talked about that 50% mark. The 88.40, we hit that yesterday at 4 o'clock, and then we kind of pushed back down to where we started the day yesterday. You can see in 24 hours, swing traders, it's moved 11 pips, but you can see that it had a decent run up. Yesterday's spike up was about 95 up and then 95 right back down again. On the 24-hour kind of longer holding period, nothing in there. Right now with where we are, I would say, let's see. Yeah, there's a 330 pushback. Right now it's hard because there are so many, look, buyers here, new established buyers, push down again, buyers in here. So as far as changing its trend, I don't know if we can really change. I don't think the trend's going to change too much on this one. Again, you're right there, Kip. Right now, 2 o'clock news, horrible for the pound, right? But what do we have at basically 4 o'clock? Pound strength coming back in. So it looks like it's not necessarily controlling its own destiny at this point. So I would say probably down a little bit, but I think we have problems probably somewhere in here. Again, we've kind of seen it in the past. We've seen them be there. It's come down and kind of touched it and was strong off there. So probably a little bit to the downside. With everything else going on with FOMC, probably not the best one to trade. Maybe look to see what the current trend is at, 1 o'clock, 1:30 to see which one of these two is stronger and then take it in the euro dollar, pound dollar. But as far as an actual setup from it right now, like I said, that was a level we'd mentioned yesterday with the 50, and that's kind of what we went back and tagged, late last night. So euro yen. So euro yen, interesting spot. We did get a rollback. Hold on one sec, guys. It's one of my parents messaging me. Hold on one sec, guys. Well, call back at 10:30. Okay. Yeah, buddy. All right, sorry about that. There was a guy that had an issue with a payment, and then yeah. All right. It's funny. He thought there was a fraudulent transaction. He didn't check to see what his amount was. Thought it was a fraudulent transaction because the name was different. I'm like, you've never heard of you know, a business and a company, or like a business and a bank account having like different things on there? I'm like, if the amount's the same, you should know. It's like you made the payment, it came through, and then you said fraud. Huh. Thanks. Thanks. All right. So we are just bouncing off the 50 right now. Looking at this one, you can see that the European session started right here. A little bit of a drop down, so it's been straight up. And the question is now, and again, when you look at this, you're like, oh, is this a good trade? There's a zone over here. I don't love the zone. Like, you could take this one as far as pullbacks go. There's a zone right there, and how we draw candles, you would look at that and say, oh, look at that, right at the 50. I would agree. Yes, there's a zone there. It is up. It is 10 o'clock. This is where you would see a reversal coming in again. And again, this would be yen strength, which again, with the markets, the markets start to deteriorate and start turning into the red. That's what you would, most likely see, is this kind of pull back down again. We did just finally break through a level though on the top side, which again, 1, 2, 3, 4, 5 is what broke, and then we're just kind of using it. We're not really trading off of it anymore after that kind of break top and bottom. Right now, I'd say this one looks very similar to anything else. I would say yen-wise, it's going to be hard because, again, markets turn red. The yen tends to, in currency pairs, tends to get some strength out of it. But at the same time, the dollar yen is going to go straight up if it's a really crazy statement today. So kind of a harder position. I don't know. I mean, Euro yen specialists, you guys can, take this one if you like it. It is a level. It is at the 50. I'm sure there's probably some fib traders in there because very easy draw from top to bottom in this most recent trend. It's a very, very easy draw. So, it's probably, it's there. What's the risk on it? And the risk is only 17. Yeah, 17. So, not a horrible trade. Again, the biggest risk to this one right now is the fact that we're at a reversal time, but it did hit a little bit early. So, with that said, I mean, it hit at the 10 o'clock window. It absolutely can finish out right now. But again, I'd be very cautious if this pulls back down again and you're about 2/3 of the way in. Please close it down. Don't hold it into FOMC. This one could get really strange very quickly with FOMC. Pound dollar. So pound dollar, important thing to know on this one. So here's kind of that thing we talked about yesterday. The reality is, I'd love to tell you guys this was a great trade. It did base, it did pull back, and it missed. It missed by 2.7. Okay. Had this one on there, had my alert go off, ran back to the computer, put my order on, and then it didn't get triggered. Yeah, I was like, oh, and actually, this should have been there. But you can see, so it missed it by just a little tiny bit. Yeah, 2.7. Yeah, it happens. It happens. Actually, this is 330. So we're not in much difference where we are right now. Missed the profit target by just a little tiny bit as well. Those always think it's kind of like, oh man, you missed it by 2. Yeah, I missed it by 2. Oh well, it happens. Right now, this is what we're dealing with. So we'll take it off. It basically missed both ends by 2, so not much we can do with it right now. We can draw this on the bottom side. I actually don't mind this little area down here. Let's pull that to there. I think right now, again, we can adjust this a little bit higher, right? I think right now, looking at the 50, knowing that it's an area that was front run, I think that's a good area for a spike. If for some reason today it is a dovish comment, that push up, that push up is 160 pips. Its daily is 205, which is a little bit overextended at this point, which again, that would lead us to an area where if we do spike up because of something dovish, it sets up a perfect parabolic retracement trade back to the downside. We are kind of in the range. I'd be somewhat interested in going long if we are down here where we had kind of a confirmed level. And again, it's a 30-minute zone. It's gonna take a little bit to stand up to something like FOMC. But what are you doing? Are you stuck again? Yeah, you're stuck again. Somebody's rubbing his eyes. He's ready for a morning nap. I'd be okay taking somewhat of a long here as long as it's a limited risk type scenario. But being right in the middle, it's like, what are you going to do? Right now, zero movement to that PPI data. Maybe, I guess, a little bit of a tick here, but we're in the exact same spot. Nothing, right? No response to something that missed by double. Just goes to show that everybody's looking at FOMC. So kind of see where it goes. If we do nothing but hold firm, though, there can be a case made that, hey, listen, there's a level right there. This is a 23.6. We're supposed to go short, right? Yeah, kind of. I mean, there's a top. There's the ascending wicks. I like that. If we are able to hold for the next 4 hours, it is an area where we could take it short. And then again, if it does, that would be a runner of about 120 pips to the downside. It should move more than that. But again, you will have some buyers starting to slow it down here. So if you can take that, I don't think that's a horrible base trade, right? And again, you kind of want to put it over here for like that, something along those lines. And again, same thinking. There's your 1 to 3. Same thinking. If this trade does get triggered in a little bit, and you are like 2/3 of the way through before FOMC, take yourself out, get your profit, and be done with it. Okay. Pound yen. Look at that. Pound yen went all the way down, came all the way back up again. So it did give us the entry, and then at 10:30, it reversed up. All it did was grab this next level here, right? We had talked about it yesterday. It grabbed the next level at like noon, and then just collapsed. So yeah, so we can make. Oops. Oh, I just want to adjust the bottom. Right there. So all the targets were hit on this one. It just needed a different level. So I would say right now where this is. It is kind of set up more for a short compared to some of the other pairs out there. You can see big push down, big push back up again. It's 116 right now because we know we're hitting the big candle range. It was not that much when we started. I would say it is set up for more of a short. Now, it has been hit 3 times-ish. There is a little bit of buyers above, but with this rally back up again, seeing what's going on with the yen right now, I would say that it's probably for me set up in more of a short. I know that's kind of, again, it kind of sounds weird, but again, I could see some yen strength coming in from that as well. I don't know that the FOMC this meeting will say anything about the yen, but I do feel like, again, if the ECB is saying that that all central banks need to work together, what they're talking about is the United States, is what they're actually talking about. The United States needs to work with other people. This again, I think the yen has the ability to get some strength today. I think this turns and rolls back down. Do we push all the way down? Maybe back into this level. I would say if there's any type of possibility. And again, remember this is kind of a proxy based tool right now. But we're at 162 and a quarter. That's quite a big push. But again, this thing obviously can move with any small bits of information. FOMC, though, would be a yen-based play, not a pound-based play. Now, dollar CAD. There's a dollar CAD. This was a trade yesterday. We talked about that reversal 10. You can see that it blew through the target. We talked about the 23 being an level, and again, it did go up. It did trigger at 10:30, and then pushed all the way down, and we're kind of in the same exact spot. Right now, it's minus 37 pips, but the reality is we're kind of in the same spot. It is running into sellers, and again, I said 138.50 is kind of a high area for this. Right now, this one is kind of, to me, looking more like it's a little bit more of a sell. Now, crude oil is down 1.5%, and yet this is magically holding firm here. I think this one is kind of like a combination of weak, right? Can we get some weak dollar action here before the news comes out? But then it's also weak CAD because oil is down. So what are you doing? This is your bouncy chair? Yeah, your bouncy chair. Boing, 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 boing. Right now, 161. Daily ATR 137. 50. There's another potential setup right here. 21. Probably shrink that a little bit. 19. There's a potential setup right there. And this is a kind of a news-based one. Right? Kind of a news-based one. If we can push this down, seeing this go take a little bounce off of it. Now, it's got to move 50 pips in 4 hours. It can do that, right? I mean, it's 4 hour ATR is 57 pips, so it absolutely could do that. But we're gonna need some help, right? We're gonna need some help. And again, it may be a little bit fast and furious right beforehand, so maybe a little bit farther. And again, this level we can take that one off. We've hit it enough times now, so yeah, I'd say that those are our kind of two setups right now for this one. Do I want to take that short? How much is that? I like the long here better than the short, but if we do rally up the hour beforehand, I think there could be a short there too. It's weird. A lot of the charts are actually showing more of a dollar weakness based off FOMC news. A lot of them are really doing it because everything's getting pre-priced in. Dollar Swiss, basically flat. Dollar Swiss is probably going to have sellers stepping in right here. Yeah, there's a few levels here. 26, 47. 36. We're unfortunately right in the middle of the range. I think euro dollar, pound dollar probably better to play on this one. I'd like to see what it does from now till 4, or I'm sorry, till 2. So in the next 4 hours, depending if we go up or down. But there are levels on both sides of this one. But again, you can see the consolidation obviously coming in, the highs being lower, the lows being higher. So I think there's easier ones to play than this one. But again, if we do pop up there, there are probably some sells in there. Dollar yen. So yeah, I mean the comments he just made. I mean, not surprising that it's going up. We were looking for it to go higher, but again, those comments are April 5, seeing the world. Yeah, I mean these comments still are very like, yep, we're doing good. This is okay. We're the island's not sinking. Those are all reasons for this to go higher. Question is, where's that next circuit breaker at? That's what I want to know. I don't think I can see this on the 4 hour. Can I? What? Okay. Am I not logged in? I don't know which one. Oh, I guess I'm plus, not premium. I don't know. I can't keep them on track. That was a new one. I've never gotten that message before. Normally I just scroll back, so I don't know. They keep updating things. It's like, what? What are we doing? Who's on first? It's right where we're at right now. Hmm. Only 40. 40.83. Yeah, I mean, this one is kind of doing the same thing, but I understand why it's going up right now. All the comments that, BOJ just made. Um, all of them are yen weakness, but again, I think we're going to get some yen strength coming from FOMC today. Yeah, be cautious. I don't know. Be cautious of this one. I don't really love it. With Bitcoin just chopping back and forth, not telling us anything. Ethereum doing the same. They're all hovering right. They're all hovering right around the big ones, right? Right. 19,000 is where they're hovering. 1,300 is where they're hovering. 6 is where they're hovering. Right. So they're all kind of just waiting and seeing. TLT obviously going lower. And interesting enough, TLT was kind of set for a long, right? Again, hit one yesterday, and we just hit it again. Even bonds right now is showing more of a dollar week, right? Interesting call. Interesting call here. Let's see. Commodities. Ugh, we're hoping to get all the way up. It didn't. Let's see if we can pull this down just a bit more. Yeah, currently right now, nothing really lines up. I'm not really in love with anything. I still like the 91.90. I'm fine with that level, especially after this rally up. There's small zones in here, but nothing major really until down here. So, yeah. Yeah, I mean, right now, I guess FOMC will have an effect on this because it's going to be about recession and what it looks like. I'd say right now, though, it does look like it wants to go lower, and there's not any seller or any areas of buyers over here where I'm like, yep, those are great. I mean, there's small things. Obviously, there's a turn right here, and then it came back and retested it. And here, there's a small level as well, but nothing great. Again, Europeans stepped in here. They sent it up, and then 8:30 they sent it straight down. And you may say, wait, why the heck is oil going down? Well, it's going down because of this. This is such a big thing. They, again, yeah, raise that interest rate even more, send us into a recession. That hurts gold. Or I'm sorry, that hurts oil. So again, it's doing what it should. But man, if they make any type of a comment that we're avoiding recession, that could be the spark that take this one higher. Question is, how much farther can we go? It's also, let's see. Yeah, here's the. Oh, no oil inventory today. It's tomorrow. Yeah, look at this dropping. Yeah, somebody said something. There's a speech, and somebody has mentioned this, or somebody's talking about it. So yeah, we can. I would say here's a potential bounce if we can come much farther than this. It's another $1.64 down. That would be a monster stay in oil. There is a small level, obviously here. Would I trade this one for OFOMC? Maybe, but again, if we break through this 87 mark, there's nothing slowing it down. There's nothing over here. I guess there's a little hiccup at 86.42. But I think we got room to run down to this 85, 83 right now, particularly with that PPI. Again, strong FOMC statement should be very negative for oil. Natural gas, on the other hand, is a little bit in the green, but again, flirting back and forth. Yesterday was the actual bottom, and we mentioned yesterday, hey, listen, there are some wicks over here, and that's out of 50, and that's what it turned and rolled off of at 8 o'clock this morning. So yesterday we were sitting right here. Right here, we said if this was the true bottom, that's where we drew it. Watch out for that 50, and it's in. No trade right now. It's already out, and you can see it's coming back down to an area of basing. It'll be interesting to hear what they have to say. Again, this is dropping down probably because Russia says, "Hey, listen, we got extra supply. It's ready. You can take it if you want. It's online." And again, extra supply means obviously the price comes down. If the EU comes back and says, "We don't want your your natural gas. We don't want it. We'll freeze." That probably leads it to a rally again. So, right now, trade is over. Not much we can do with it. Obviously, this area down here at 655 has been hit a few times now, eating up those buyers. It should come up probably a little bit lower. Gold. All right, so gold. This is an important one. So gold, we were looking for a pullback. We didn't get it. Right now, you can see gold is literally just going sideways and it's chopping back and forth. Okay, we do have a Harry Potter talking about the breakthrough 1655 down to 1644. Right now, to me, gold looks like it is in more of a short type scenario. We do have some sellers right above where we are. Obviously, there's a level kind of sitting right there. With it chopping back and forth, it is chopping lower and lower and lower. I would say gold is probably more of a short. And here's the way to play this one. I think we're kind of looking for a little bit of a rally. We would like a rally up somewhere. It'd be awesome if we get up here, but I don't know if we'll make it there. I don't know if we can clear this the 1670 area. I think getting short is great. If we are wrong and it does do a big spike up, as soon as it looks like there's a top in there, drop it to a lower time frame and take it short. It will push back down again. If we get something like this, right? If they make a dovish statement, it should pop it up, but then it should start to roll back to the downside in near term. So again, if you don't want to handle the risk, if it's too much gambling for you, don't trade it beforehand. Wait for the spike. If it goes up, trade it. If it's a spike down, you've missed the trade. It's too late. It'll rally up slowly, but it's not going to be as much of a shock, right? It's not going to be as much of a shock. So with it moving sideways, again, look short. And again, I still like this trade if we can get down. I doubt we're going to come down and pull back in time. This is probably something later on today, but a break of 1655, looking for 1644, that 11. And then again, you can see we got some clear sailing actually. If we break here, you can see we have clear sailing right back down into that 1625-ish level. Silver. All right, so silver, we did get a pop. We missed it over here by a little bit. We were kind of hoping that silver today was going to drive right back up into that 23.6. It didn't. We were sitting here yesterday, took a little bounce and then drop. And then as of 2 o'clock yesterday afternoon, it's done nothing. So I can move the, whoops. Not what I wanted to do. You can see right now, it's not really in a great level. We talked about the 61.8. You can see the 61.8 did nothing. It did not reverse on that one. So sorry, 68 traders. Kind of went lower, went higher, stop them out, went down, and then it's messing with them. I would say that there would be our downside target today, 1860. And at the same time, 1813, I think, is the other target. Ooh, that's actually a decent one. Look at that. If I bring that down and we come down here and touch 1813, look how that 50 just all of a sudden lined up for us. So I'd say those are our two downside targets for today. Right now, that's where we're sitting. And again, I would expect it to shot back and forth. We're hoping for a rally higher. If we get the rally, look for the turn and roll back to the downside. So it's there. I think gold and silver are both, things if you can get short ahead of time in a limited risk faction, do it. If not, if you can't, pray that it spikes up really, really high and then take it short from there. So I think both you want to be short. Indices obviously now steadily creeping into the red. Let's see what we had. 930. And 930 had an interesting pop. For you to draw this one, and I didn't expect there to be anything today. There would have been your top, obviously, at 8:15 this morning with news. There was kind of the 8:30 kind of pushed it to the downside, as it should. It is a negative move. So I would say that today is another one of those days where, for news, it rallied up 30 minutes beforehand into news. There's your news trade for the day. And again, there's 3.1, so you can see it's definitely out at this point. As far as the 930 candle goes, the 930 candle is the green one. It was not an area of buyers. That would be this lower one down here. It didn't touch it. It didn't go there. And it had just taken you out on profit, literally a candle 15 minutes before from the news trade. So doesn't really qualify for today as far as an entry goes. I would say if anything, it's all bearish today. We were looking for a pullback. It just didn't go to the entry zone. It had already triggered and taken you out. So news trade 1, opening print 0 at this point. This has done the same thing. Sitting in the same level, right? There's your level of news. Kind of came up, touched it, and then boom, it collapsed back down again. On the other side, though, you could have said, hey, listen, there's an area down here. This 930 did touch it. Let's see. Had you taken this at the open, if you didn't take the news, if you didn't know how to trade news, 1, 2, and 3 is right there. So if you didn't know how to trade news and you took this at the opening print saying, hey, listen, that's the most recent kind of, zone that we have, the decent zone that we have, and you got long here, you did get out at a 1 to 3. So the truth is this should have been a news trade, not an opening print. But if you took it as an opening print, not only did you get entry, you also hit full profit target. Okay. This one would not have been anything. You wouldn't have got, you missed entry. So there's nothing. So 1 for 2 right now in entries, 1 for 1 as far as profits with opening print. You're 2 for 2 on news trades. YM also did the similar thing. The 830 is the red candle right there. There's the news. It's very quick, so I'll draw a little on there. Bump. Whoops. It helps when I do it correctly. 1 to 3.2 is right there. So bam, there's your out. This one also had the area really here. It's kind of where the base was. So it did touch. Let's see. And again, it was at 930. Yep, 930 is the green that spiked down. Let's see if 930 tagged it. There, and 1 to 3 is right there. So again, same thing. It was really more of a news-based trade with that 830 PPI. Again, that's one of the kind of the big things. And your profit would have been taken out at 845. If you waited till the opening print, you would have got into it as well, saying that, hey, listen, this is the most recent base that is untested. You would have not used this zone because it has touched it here and touched it here. Too many hits, so you would have had to go lower, and that's where the next confirmation was. So it would have been 2 out of 3 so far, and then 2 for 2 as far as profit targets go. But again, typically we don't take one trade and then reverse it and go back in the other direction. We take our money and we run. So it's 3 for 3 on news, 2 for 3 on entries. All right. Same thing. If you were looking at zones, there's where your top was. There's your 815. There's your 830 candle. 930, and again, this is a level of basing. 930 was over here, right? Technically, same thing, I think, as ES, right? Your short position is there. So you're officially at there. If you said that, hey, listen, there's a zone here, right? Looks like you would have probably got stopped out on it. It's a little far, though. Actually, 930 open all the way up here. You probably would have got stopped on it if you tried to use that as an opening. But again, you just finished a trade. I mean, literally, it was the 815 candle. So again, if you know the new strategy, you would not have been taking opening print. So worst case, again, news trade, 4 for 4, all 4 hit full profit target today. It doesn't matter which one you traded, all 4 of them were great. Had you been trading opening print, I guess worst case scenario, you were 3 for 4 on entries, right? And 2 for 3 on full profit targets. So you would have lost 1 and made 6 on the other ones. So you'd be +5 depending on what your position size is. So yeah, I mean, still a great morning. Like I said, this is the one that, again, if you knew the newsprint, you weren't trading this one as an opening print. But worst case scenario, you did, and you got stopped down on it. You still, you lost your 1 here. You still made, +6 on the other 2. So still turned out to be a great morning regardless of how you turned it. But again, that 830 number today really tanked it. But all 3 of them were all lined up the same exact way. So we'll see. I'd be cautious. If anything, I would probably lean more towards the side of being bearish in the overall indices. I don't think they're going to slow down the next 2, and then maybe they slow down. Maybe if the market here slow down, great. But the big question is, can the market tolerate the next 2 raises in a row with where we're at? Again, PPI is there. I know people are talking about we're not in a recession. People are still spending, but yes, I guess people are still spending, but right now, the retail sales numbers are all expected to be less, right? Less than what they were before. So, and this one not as bad, but still negative, and this one less. So people are starting to spend less. So, and the question is, Again, if we raise it another 1.5%, percentage points, what the heck does the what do auto loans look like, and what do housing loans look like? Because there's two sectors that are absolutely going to be affected. So, yeah, I'd say I'm kind of, if I, what I'm looking for right now is see how these green candles, these 1030 green candles, loving the green candles. I think the green candles are great. I'm loving the green candles in every single one of these. We are looking for that, right? Because we know at 2 o'clock is when FOMC comes out. So we're looking for that. We're looking for that. We are looking for that. And we are looking for this. Right? So we kind of want green from now till then on every one of these. It's like, come on, green. Come on, green. Give us green on all these. And then let's see what happens at this dotted line. So, all right. So with that, yeah, I mean, dollar's creeping up a little bit as it should. I see it's doing it again. Look, it's another one of those ones that is kind of creeping up into areas. Like, it's crazy. They're all creeping to where we're going to get dollar weakness today. Kind of crazy that we're seeing it on like everything. Yeah, I don't know. Weird that we're seeing this much dollar weakness. I'm curious if they're going to say 7.5 and then 0.5 and then wait, or 7.5, 7.5, and then we're going to pause for one or two times. And we're going to see dollar weakness come in. So we are just seeing it on like everything now. It's crazy. It's crazy when you see stuff like this. So I don't know. All right, let's go ahead and do the drawing today. So who do we got in here? We're missing Neuro. I see Neuro's not in. I see Debbie's there, right? There's Neuro. No, Eki's in. No Sean today. No Sean today. Right? Who else are we missing? We're missing somebody else too. Will, Ernest, Neuro, Debbie, Marina. Huh. I don't know. Maybe it's, I don't know. Guess it's Sean. Anyway. Oh, there's Sean. I was like, I swear Sean's here today. All right. So there we go. And normally 8 has been our average lately. So we're missing somebody. Who knows? Oh, you know who we're missing? Jeff. Was it Jeff? Yeah, I think it's Jeff. Jeff's been here lately, but he's not here today. All right. So we're going to close this one down. All right. So, yeah, it is Ernest going for 2. Neuro's got a little bit of pressure on him there. Neuro's got some heat, right? Will he halt Ernest's second win? Actually, Ernest is ahead. Sorry. Neuro's got a little heat, but Ernest has the statistical edge. So let's see. Does statistics win on the day? Winner of today's drawing is Neuro. Look at that. Neuro took it with the underdog. 23% chance. The underdog took it. Not the big underdog, but the underdog took it today. But I feel like didn't Ernest take it from Neuro last time when Neuro was going for double? I feel like that's what happened last time. Right? I feel like that's what happened. I feel like Neuro is who stopped Ernest's win streak, because Ernest was the winner. So I feel like Ernest was there. Neuro was there. Ernest stopped him, and then it's back. Yep, he's on my heels. I know, right? Yeah, yes, I did. Yeah, see, so he stopped the one streak and then played the other one. So I'm telling you, man, it's like the Coliseum, right? The Pip Chip Coliseum. So, all right, guys. With that, I'm gonna go rest my voice for the rest of the day. Again, very, very big. FOMC is going to be huge today. Oh, look at this. The ECB is unlikely to need rate hikes in excess of 0.75 basis points. No convincing side of wave price buyout, no broad densitying. Look at that. And yet the United States is like, we just did 2.75s. We're going to do 0.75 again. We're going to do 0.75 again in December. There's not a risk that fiscal policy will force us to tighten more quickly. Yeah. Look at the ECB trying to screw this all up, right? Yeah. So remember just a little while ago, right? Remember just a little while ago where she said that the central banks need to cooperate. Instead of saying central banks, she should say the U.S. Fed, because that's what she means. That's what she means. I told you that's what she meant. So anyway, maybe a housing downturn, but not necessarily a hard crash. Yeah, because it's not the same problem. Yeah, they're stronger than they were pre-pandemic. Yep, because we had free money forever. People love free money. Free money for 2 years is great. Tremendously uncertain about fundamentals. Yep, by moving rates up at an aggressive, not overwhelming pace allows room for necessary adjustment. Yeah. Oh, gosh, Curry's now 75 basis. I mean, it's very aggressive, but the same guy, right? The same guy that saw we absolutely no signs that it's working. So, all right, with that said, I'm out of here. You guys have a good trading day today. Need me, shoot me a message on Discord, and I'll talk to you guys later.